Hi, investors. Today, I wanted to talk about seeing a company's internal ability to generate income from their equity, and specifically seeing that historical trend right from the thinkorswim platform. Before we get into that, though, let's hit some disclosure items to get started here. Information here is for general information purposes only, should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. The paper money software application we'll be looking at is provided for educational purposes only as well. Now, there are risks associated with investing in dividend paying stocks. Investing in stocks involves risks, including the loss of principal. Past performance is no guarantee of future results, and there's no guarantee that the execution of a stop order will be at or near the stop price. Okay, first off, what I want to do is take a look at the Schwab.com website. We're just going to initially take a look in here. I wanted to direct your attention under research and then research tools. Let's just take a look at Apple as an example initially, just to highlight what we can find a company's internal equity strength. And what we're looking at here is specifically return on equity. Now, what I'm going to do is scroll down into some ratios here, and we do get an interesting selection to take a look at here right off of Schwab.com. It does give us some peer, as you can see right here, peer and ratio comparisons. Now, specifically with that, what we can do is I wanted to look at return on equity right there. You can see it's rather quite high. In fact, it's right around 170. And a lot of times, traders and investors, and really, historical investors looking for the long term performance of a company might have the return on equity mirror. It's return on equity. We'll take a look at that ratio here in just a second. But what they're looking for oftentimes is somewhere between 8 to 12%. Of course, I have seen actually an 8 to 12 number. I have seen these ratios go as high as, people look for 15 and higher. Of course, we're much higher here with Apple at 170, but we're looking at consistency here today over long periods of time. Okay, but and a lot of times when they look at this 8 to 12% range, what this will oftentimes mirror is the long-term price performance of the S&P 500 index over a period of time. And what is it able to perform on its price performance, although we're looking at internal fundamentals here, okay, when we look at ROE. But that's where they derive sometimes these percentages. Now, if I come up over here, there's a little note to the right of that return on equity. If I click on this, you'll see that we've got right down here, basically the general formula for it. So it's net income, it's common shareholders. We're dealing with publicly traded companies. I'm just going to put over here NI, net income, divided by average common, again, publicly traded companies. But really the key point here is equity. What is our return on a company's equity? And equity, just as a quick note, many of you know this, but it's just simply assets minus liabilities, and generally getting at what a company owns as opposed to what they owe. Okay, that is the equity, and it gives us a sense of, based on what the company's equity is right now, what kind of a net income are they able to generate off of that equity. So it gives us a very, very interesting perspective. Now, with that, uh, we can see performance in a number of stocks. And for example, I'm going to pull up this first. Let's shift right to the thinkorswim desktop platform. And what I'll do is I'll take a look at this company first, ABNB. Now, you can see down here what is really, really nice, which is different from Schwab.com, is that we are able to get a historical read of return on equity right there. It's the top line under profitability. It's a profitability ratio. And you can come over here. It's got our current number. And clearly that's above, the 8 to 12 and even 15%. But you'll notice over here too, there is quite a bit of variation. In fact, if we take it back, looking from left to right, going out 5 years to 2025, the year that just ended here, you can see that was a negative ROE. So based upon what the company had internally, right, their equity, net income was actually a negative number. Now it did jump up, it jumped higher, higher again. We don't quite have a calculation on 2025 just yet coming in, but you can see over here, we were low, we shot up, and we shot up really high, and then we shot back low again. there's quite a bit of variability even over the 5-year time frame that we're looking at there. Okay, now sometimes what longer term investors are focused in on is just kind of that steady as she goes. They just want that consistent performance occurring over time. Okay, so they're not really necessarily looking at the major lows or the major highs. They just want a consistent range to enable share prices to grow and go up higher over time. Let's go ahead and just take a quick look at this chart here to see how ROE may have affected long term the performance of the company. Here is Airbnb. There's a 1 year, but here's a longer term. You can see that even coming back over this longer term time frame, we did come down, and some of that negative ROE could have played a role in here. Once you start to hit those negative numbers, it does kind of change the dynamic, the way that a lot of investors will look at the company. We shot back up, we came back down again, but really down to sideways. Now let's take a look at a different company over here. And again, I'm in the Analyze tab, and I am in sub-tab right there, Fundamentals. So Analyze, I realize we started off in that place, but that's right where we're at. Got the symbol in here. I do have this linked to my charts, and that's why the chart popped up so quickly. Just have it linked as the red number 1. A good, quick time-saving tool there. All right, now on to our next company. Looking for consistency now. Now here is CSX Corporation. Tells us about the company and the company profile. But for now, let's just take a look and see what we've got in terms of that historical return on equity, ROE performance. Well, right now we're at 22. Okay, so that kind of fits above the range we were looking at that a lot of investors would look for. 2021, 28, 31, 29, 28, 22. Do you see some relative consistency here? Folks, we could go back a little bit further, would spot similar consistency as well. And so think in terms of not so much what sales numbers are doing to bring in new earnings. Think about a company's ability to generate internal earnings, right? Net income, or income, I should say, right? From what it owns, assets minus liabilities. Look over the stretch of time. Pretty consistent, right? Let's come and take a look over here, and holding clearly above that 15% level. Taking a look at charts up top, you can see, yeah, okay, we had been a little bit flat over here for a time, but you'll notice what we've done is we've retained our gains with this long extended upward trend. We went up and we went sideways. Okay, let's take a look at one more in here as we go into this. Okay, so here is another company, well, company you may have heard of, Coca-Cola. All right, so here we go. Return on equity again, really quite high, 42. Let's see how well we've done at retaining this over the last 4 to 5 years. Back to 2021, 42, 37, 40, 39. Folks, you can see a relative consistency here. What does that tell us about the business that we may be investing in? This is just an example here, right? But these are some of the things that investors would look at with the ROE specifically. Do they have confidence that what the company has working behind the scenes, those assets that the company has, less liabilities, right? What are they able to do in terms of generating income for the business? And importantly, what does that do for the confidence of an investor looking, here's a look at Coke over that same time frame. Well, pretty much, up to sideways to up to sideways, but a general trend to the upside, sometimes rewarding that company for that consistent performance, generating those historical trends in the ROE. All right. So as we looked at this today, just wanted you to keep in mind that the return on equity ratio, ROE, is just one ratio that investors may consider when assessing companies' fundamentals. I want to let you know that it could be combined, obviously, with other fundamental and technical indicators as well. Folks, if you found this video helpful and informative, smash that like button. As always, love to have you subscribe to our Trader Talks channel on YouTube.